Hi, everybody. This is Gary Dean, and I'm with Woody Dorsey. Today is Wednesday, February 2nd, 2023. This is our video call going back and forth. So without further ado, let's get started. How you doing today, Woody?
It's cold up here.
Yeah, I heard about that. I heard it's getting pretty cold. So the Fed yesterday cut the rates by I mean cut it. They raised it by a quarter point yesterday, and the markets are going nuts on just really kind of the verbiage on it. What are your thoughts on the current state of the market? I mean, we've had a pretty big move in the S&P in the past really 3 days on it, and do you think it's going to continue to last? Do you think we're going to get it's a little bit of a short-term blow off top?
Yeah, we might get a blow off top by tomorrow. There's more data tomorrow.
What's coming out tomorrow? I don't have it in front of me right now. Is that the
The
initial
jobs data,
Yeah,
Yeah, but I mean the interest rate changes and they had raises today in Europe. It's not like they're totally surprising.
right.
I think what's surprising is that the market trades very well. And you have to look back. And I think the majority of people feel like there's some kind of horrible crash coming, and that's not happening. So the market is just meandering upwards, basically. And I don't think people like it.
No, no, there's right. I've never really have seen a split in what people think is going to happen in the market long term, and where I'm seeing, half the people are looking for those October lows to get taken out, and half the people saying we're starting the new bull run because the Fed's going to start cutting rates. So they're like their reasoning behind it. I don't really understand it, but the market's going to do what it's going to do.
Yeah, well, you know, as usual, the Fed doesn't really have that much to do with it. So that's a convenient scapegoat for what's going on. And I don't think that people are going to do much here.
Right, right. So,
But if
I'm
you
sorry.
look at this chart, I'm sorry,
Yep.
but you put up this monthly chart, okay?
Yes, that's what I was just going to bring up. I was going to say, so we're taking a look at the monthly chart here. What I just have these are these lines right here. Just follow with every chart. These are just some resistance lines I have, so you can ignore them if you want. But here's the monthly chart. So, what do you see from here?
Well, the bottom line is it's a bull market, whatever that is. And people don't like that as the
Right.
market bottom, and it's in a bull market, basically. Look at the way it's traded recently. But what does that really mean? We have to understand that we're in a new phase of rising interest rates and rising inflation that started basically a few years ago. And that's going to continue. It's a new era in financial culture. But, people don't really care about that. They just want to make some money. Ultimately, there's still a ton of money around there. Stocks are just sitting there, So they're basically sort of bid. But when you look at the monthly chart here, you can see that there's very good reason why we might continue the congestion, which is my general preference.
Right, right. Just do you when you like the new bull, like, so let's say the bull market that you're referring, are you looking at at these highs to be taken out this year, or you think we're just going to be in a messy market bouncing up and down for the year and not really staying off of the lows but not taking out these highs? Is that something that you believe is playing out, or do you think we do take out the highs?
Well, I don't think we will, but this market, we'll see what it does. There's plenty of money around. So,
Let
and
me.
I think people
I'm
are
sorry.
sidelined. People are very much sidelined. So I'm not sure they're going to find a reason to really take it up importantly, but they're certainly finding reasons to kind of, take it up somewhat.
Right, right, exactly. A lot of them that we see playing out, at least like a common thing that I've seen month in and month out is once we get towards, we're heading into a Fed meeting, it's you most of we're seeing people that are bearish on very bearish on the market or short the market, and the Fed does exactly what everybody expected them to do, and they have these algorithms programmed to catch the majority on the wrong side, and I think a lot of people are really shorting this market pretty heavily going into it. So the path of least resistance was to squeeze these shorts out. And then, what happens is after a few days, the Fed sees what's going on and they're, nervous about it because this is the last thing they want to try to calm inflation is the market. They need to kind of take things down. So they come out with some hawkish comments, and everybody that's buying right now is selling, turns into sellers. And it's just this crazy whipsaw movement going up and down, and that kind of fits your whole very messy market environment.
Yeah, that's right.
Yeah. So
Yeah.
let's go. What about for the pat? Let's just say I'm going to move it to a weekly chart here. Hang on one second. Okay, so this is the daily. So during this period here, it has, because I know sentiment was kind of low on this one, but these past 3 days, are we seeing sentiment? Did it have any kind of spike, or is it are
Yeah,
we getting
Sam, I
any
think
kind
it's 92 today.
okay?
So, but what's really happening is that people are impressed with the market. It's not really an individual day or individual price bar. It's just that people are bidding up the market.
Right, right.
So,
Exactly.
you know, and that might continue for a few days. I'd like to see it down next week and down into March also, but we don't have a real turning point, a real defined point where either the Fed is gonna stop easing or something else is going to happen. We're just in this big mess.
Right.
So it's not necessarily a good investing environment, although I think people are just generally, the general investor has their their funds and they're in the market as much as they are, but there's no reason to press alongside, and there's not really a reason to press the short side unless something else happens in the world.
Right.
So it's pretty boring, really.
Yeah, yeah. It's I mean it's like you said, it's kind of drifting higher on it. We're getting these big moves in both directions. People, seem to be very confused with what's going on right now, whether, this market's going to take out the October lows or take out the 4,800 highs. So let's do this. I know we spoke a little bit about, you mentioned in the first video, as far as the time period, that you were looking for a low date in February, and I believe it was right around the 16th. So that was there, and then in the monthly report that you do, we mentioned something about March being another.
Yeah, well, those are two totally different reports.
Okay.
Looking at the monthly or whatever, but the bottom line, remember, what is the bottom line here? The gestalt is that this is a bid market, but it's messy, and that we're going to poke up, and I think we're still going to get some corrective action into mid-February bounce, and then also get some corrective action into mid-March. But these are not, it's not the Super Bowl. These are trends. These are short-term trading ideas encapsulated in the idea that we're still in a big sideways market. And I think people are going to be falling all over themselves both ways. But I think it makes sense to begin to have some corrective behavior. I don't think we're going to run away here.
Yeah, I'm actually on the same side with you on that one. Like I was just saying before, with using history as our guide and what takes place, right? Heading into the Fed meeting and then after it, and where there's usually some type of, I mean, just again, this is just history on it. There's usually some type of blow off top reversal within a week after that. Now, I mean, I don't know if this one is going to do that, but it's just a common thing that we've seen in this market for really the past. I mean, we could even go the past 6 months, because they're looking for any just little clue that the Fed's going to start cutting rates, and that's one of the things that I had mentioned in the morning notes, and I would love to hear your thoughts on this is. If you're actually listening to Powell's comments yesterday, what he had said was the deflationary trend has started. So to put that in layman's terms, he's basically saying, the recession part is starting, and we're seeing traders jump up and down and cheering it, because they're seeing a light at the end of the tunnel for rates, where rates are going to start coming down. So they're front running, rate cuts as, we have in buying, bidding up the market, as the Fed chairman saying that we're probably in the beginning stages of a recession. Do you have any thoughts on any of that stuff?
Nobody knows, when they keep trying to front run him with a pivot, but nobody really knows what's happening. And as you know, I know Jerome. He stood behind me in high school.
Oh, really? I did not know that.
No, anyway, and somebody asked me, well, hey, what's the guy like? I said, yeah, I know him. He's very straight ahead, just with his interest rate policy. This interest rate game may be going on for 10 years.
Yeah, it's been going on for 10 years already.
Yeah, but I mean, it's the beginning of this interest rate inflation pivot thing. It's
Oh, okay. I know what you're saying.
yeah. So I'm not sure there's much to do about all of that. He's going to stay relatively tight. They're going to watch the data. We're all going to watch the data, but I mean, what does that mean?
Right, exactly.
So, so the market has really gotten itself into a pretty neutral position.
Right. So, and
And
this just giving a show on the 60-minute charts, so we can go through these. But so is there anything else you want to touch on here that I didn't cover?
No, got it. It's pretty boring. It's there's no major signal, and we need to see more data. And I think we will start to get some corrective behavior. Now, by corrective behavior, I don't mean S&Ps are going down 300. People are looking for big moves. There are no big moves here. I think it's going to chop around. So that's a great trading environment, in and out, in and out.
I love it personally, as say a technical trader, because I listen to what you say as far as your bigger picture and stuff like that. And if there is no, say, bigger picture view, I stay what I call trade mode. And trade mode, to me, is, I look for 100 points in the S&P for the trade. If it's there, you start scaling out. You don't look for the home run. You hold on to a little bit, whether you're long or short, a third of it to for a home run trade, but you've already closed out say 2/3 of your trade or half of it. And it's I mean, I love it, because when we have these big moves like this, a lot of times the my momentum indicators and everything like that, they work really good when we're in the kind of melt up phase, as when the Fed's at 0% interest rates and stuff. Things don't make sense with the say on the technical end of things, because you have everything that just gets ignored. You have sell signals, you have it's the extreme bullish sentiment, and the market just continues higher. So when we start getting volatility, it's a, that's something that I mean, I like on it. So let me actually, I want to actually put that up. I want to put up a VIX chart and see if you have any thoughts on that, because right now we're kind of at the bottom of, where we're going, we're at levels going all the way back to the
Yeah,
October lows.
well, it's been in a range basically,
Right.
and it's not going anywhere. And that's the whole point. It's not going anywhere. There's not really no vein here that you can really get excited about. And so the VIX is saying that, which is why the market is suspect in general. Yeah.
Right. Right. So
I mean,
what
at
one of
some point, maybe in a few months or something, we'll get some some kind of a signal in VIX and everything else where we're either going to launch or people got the whole thing wrong.
right. Right.
Yes, it
Um,
doesn't seem to be here yet.
yeah, exactly. So what I was just going to ask you another thing on I'm trying to think what I just forgot my question, but anyway, I know what I wanted to ask you. So what do you have any take on when you have the Dow going one way and say the Nasdaq and the S&P going the other way? Do you have any kind of read on that you can inform our members here?
Well, I don't really, see a big move there that in that way. I mean, ultimately, if the market is really going to move importantly one way or another, it'll all move together. And because it's so sloppy, people feel fine. Like, okay, I'm going to buy Meta. I don't care what IBM is doing or what is doing. So people are getting used to just playing their favorite names and not worrying about the big market. But they ultimately those indices will go together when there is a big move.
Right, exactly. And well, that's one of the things that I brought up. It's in my videos and everything, is that the disconnect between the Dow and the Nasdaq and the S&P and even the Russell 2000. It's pretty. You don't really see that it carry on for that long. It's either you're going to see the Dow reverse higher to try to play catch up with the smaller indexes, or you're going to see the Nasdaq and S&P and Russell reverse down to catch up to the Dow. But like that's one of the things that I brought up, is exactly what you said, though. It's when you're in a very strong move, they all move together. You don't have the Nasdaq and the S&P carrying the Dow, or the Dow carrying the S&P. They all kind of have to run together, or I look at it, and correct me if I'm wrong on this, but I look at it as a fractured market, because the engines aren't all, the cylinders aren't all going together right now. There's something going on, and unless it fixes itself, I'm looking at as just saying a car engine. And if you don't get that fixed, eventually what's going to happen is something's going to break, and whether it be to the upside or the downside, but something's going to have to get fixed on this, because I don't think that the market is sustainable with the Dow and the S&P going in different directions.
Yeah, so we could end up with more of the same. In other words, nothing is happening
Right, right,
until it happens,
exactly,
and nobody
exactly.
likes that. Yeah.
Yep. Yeah. Well, just looking, this is on a daily chart, and it would. I mean, if I'm just looking at red flags where we're looking for, just a little, say, setback in the market. I mean, this is when people are getting very, very complacent with the market. When you see this going down, and this is on a daily chart where you have, the momentum is actually making higher lows as the VIX is making lower lows. And when that happens, and I'm just looking at this support right here, which is, it's pretty, anybody who was buying the market as the VIX was in these levels here didn't do well on the short term. Long term, that's a totally different thing. But we're seeing the buy signals, and we're seeing support right here. And this is where we see, 92% bullish sentiment reading, and then everybody's on the, the side that we're taking out the 2020 highs or 2021 highs, and they get caught, and then everybody panics, and you see the VIX trading back up to resistance, and that's where those are the types of trades that I look for, where you're going to see the S&P move, anywhere from 100 to 200 points, and it happens in a very, very fast time period now. I mean, it only takes 2 days to see the S&P move 150 to 200 points. It's not it's taken a week or two. So it's like chickens running around without a head is probably the best way to look at it, because it's either buy or sell, and there is no in the middle on this, and that's, to me, just from a technical aspect, is it throws up some red flags, just with whether we are going up or down. It throws up red flags when we see stuff like that, when everybody's either buying or selling, and it's usually off of something the Fed said. Really, so far, it's always been off of what the Fed said, or what they think the Fed's going to do because of this data or that data. So I agree with you on that. It's a
well,
little
there's
bit of
no
a
doubt.
crazy.
Yeah, the market is vulnerable. The market is vulnerable. Expectations and complacency are vulnerable
I agree.
at these levels. So
yeah, exactly. So, well, let's do this, Woody. Let's wrap this up so I can get this out to our people. I appreciate you jumping on the video call. Unless you have something else to say, I think we're all pretty good here.
No.
All righty. All right. Have a good day.
Okay.
All right. Thanks, Woody.
Send me a Skype.
You got it.